Hello, everyone, and welcome to our new year, new market update with Nicole Ruth. Nicole, thank you so much for joining me today.
Always a pleasure.
Happy New Year. We have so much to talk about because there's a lot going on, not only in our market, but a lot of markets across the board. Our inventory's picking up. Unfortunately, the Broncos did not win this past weekend. So that means our spring real estate season is kicking off here in January, which is great news for those home buyers out there. But something I want to touch on for our homeowners out there before we get into the home buyers is that I obviously can't stop taking my eyes off the TV screen and everything that's happening in LA and all the homeowners who have lost their homes, their possessions, and stuff like that. And it got me thinking. I was talking to another realtor earlier today about homeowners insurance. And for all of our homeowners out there here in Colorado, obviously we had the Marshall Fire that happened a few years back, but every other homeowner out there, including myself, I really need to take a look at this. But our homeowners insurance policies, what do they cover? How much do they cover? And especially for those homeowners out there who maybe have bought a home pre-COVID. As we all know, home prices really skyrocketed during the COVID years. And maybe a home you bought in 2019 for 500,000, maybe today is worth 700,000. And does that homeowner's insurance policy that you picked up in 2019 when you bought the home, does it cover a $700,000 house, or is it still a $500,000 house? So I'm just encouraging all the homeowners out there to, even if Colorado or beyond, if this should happen, or if it's even a one-off, if you, God forbid, your home should have a fire, what does that look like in the essence of insurance? What does it cover? What would it cost? What are the scenarios? And have an honest conversation with your insurance provider, insurance contact out there. I have to do it myself because now it gets me thinking, God forbid I should be in that position as well. So definitely want to put our hearts out there to all the residents in LA, everyone who's lost homes, their possessions, maybe unfortunately pets too, and hoping that their journey that they're on will bring them some peace and moving forward with that. So, with that said, Nicole, let's pivot a little bit. Let's talk about some buyers. We are now in 2025. A lot of buyers out there are now going to get in the market, like I said, because the Broncos unfortunately lost. We had a great season, but a lot of buyers are now going to start picking up their searches because there's not Broncos to watch on Sunday afternoons now. So, what are you hearing from buyers out there? What should they be looking forward to? Any other creative strategies for them to get involved with you?
Buyers today, I think, are finally getting used to what rates are doing.
Yep.
So we just saw with the jobs report that we had the first Friday of the month, we saw unemployment tick down. We saw jobs created were much higher than expected. And the initial jobless claims week over week have been going down. So we're seeing a healthier job market than anyone assumed we would be looking at right about now. And given all of that, as you can imagine, a strong economy means higher interest rates. That's the equation. The two go together. In weak economies or in global duress, you see lower interest rates. So we're starting to question, are these higher interest rates more of a standard? Now, we're still expecting long-term interest rates to drop a little bit, but how long will that take? How much will they drop? So what I'm seeing is a lot of buyers are having conversations where this is the reality we're in. We can keep waiting, but we've been waiting for years, really since April of 2022. So now we need to make the best decision for ourselves, for our family that we've sacrificed for too long. And it's time to either move out of this house, it's too small, too far away, been a sacrifice, and get into something that's more appropriate. Or for those first-time home buyers, it might be time to jump in because, interestingly enough, with the higher interest rates, we didn't see a depressed economy in our real estate. Now, we saw less numbers as far as transaction goes, but our homes actually appreciated 1.8% in 2024. So we're still seeing continued values increasing. So the longer you wait, while we might see interest rates drop a little bit, that might help offset a mortgage payment, you're going to pay more for that home the longer that you wait to buy it. So we have seen a lot more buyers come out, which means that now that the Broncos have lost, we are going to see a little bit more competition, especially for those homes that are priced right, staged right, in a great location. Those homes, you could have some competition. Now, we will not see the kind of competition that we saw during the pandemic where it was outrageous and way over asking, but you might be up against one, two, or three other buyers who have found that particular home appealing and might not get some of the advantage that we had to negotiating, especially over the last handful of months through the fall and winter season.
And for those buyers who are still out there on the fence, I mean, I really encourage you to talk to Nicole about some strategies. There are some great strategies out there. And like Nicole said, I mean, how long do you want to wait for? I mean, if this is something where either you're a first time home buyer or you're a buyer, move up, move right, move down, and it's time, you're tired of waiting, what is the cost of waiting to you? I mean, if it's something that would make you and your family life happier and better to be in a different house or larger, downsize, upsize, whatever, right size, I just worked with a couple buyers over a buyer seller that, we were hesitating on listing their home before Christmas or after Christmas. And we got it on the market during Snowmageddon, had multiple offers because, like you said, it was staged right, it was priced right, it was listed right. They did everything I told them to do. And we got multiple offers during Snowmageddon, that one snowy weekend we had a couple months ago.
Remember?
And yeah, and they were like, they could not believe the luck that they had, but also the timing, and also the fact that they didn't have to now wait until go through Christmas. They could just settle into their new home, have Christmas morning, not have to worry about getting back into this real estate journey after the holidays. So it's all about timing, but also what is the cost of waiting too. So definitely have some, call Nicole, have some strategy sessions with her and her team. She is great at handling all sorts of different things. And especially, I'm seeing a lot of buyers, especially in 2024, ask for a 2-1 buy down to the seller, especially sellers who have a lot of equity. That can really help out a buyer who's maybe really wrestling with those high interest rates. So Nicole, can you quickly explain what a 2-1 buy down is?
I can, because we're still seeing it. Even going into the spring market, we are going to see that 2-1 buy down, unless you're in a situation like that where you have multiple offers and you might have to give that up in negotiating. We are still seeing buyers asking for it, and we're still seeing sellers give into it, or not give into it, but provide it.
Yeah.
A 2-1 buy down has been really strategic in helping somebody step into a payment. Now, in the beginning, everyone talked about the 2-1 buy down to kind of get you to the place to where everybody could refinance, and that's been going on longer than we thought it might. But right now, what I've been talking to people is, I just had a great conversation with 2 engineers yesterday, and they've both been getting raises every single year, and they want to move into a house where they want to start a family that doesn't necessarily tip them over their budget, but it does push them a little bit. And so they were thinking a 2-1 buy down would allow them to move into that monthly payment and give them the opportunity to have 2 years of raises, even if we don't see interest rates drop down. So what a 2-1 buy down is, so say the interest rate today is 7%.
Mhm.
We've seen interest rates with a 7 handle lately. So say the interest rate is 7%, what would happen is for the first 12 months, the interest rate, the effective interest rate that you would be paying a monthly payment on would act as if it was 5%. And then the second year, it would act as if it was 6%. And then the third year, through the full 30-year term, it would be the 7%. Now, the interest rate on that loan is in fact 7% the entire time, but the seller is giving you a seller credit that is being held by the lender that is offsetting that monthly payment every single month to make that payment lower and to act as if the interest rate were lower. So allows you to slowly take that lower payment, and then the next year it's a little bit higher, and then the third year it goes back to what a traditional payment at that rate would be.
Right. And take those first 24 months of home ownership to work on that budget to say, okay, maybe we can refinance when that 24-month hits. Maybe we can, with our raises that we're getting, we can then factor that into our monthly budget. So all good there and it was so great to see you again. Thank you so much for chatting. I look forward to catching up with you next month and Happy New Year.
Happy New Year to you as well.